Okay, good day everyone, and welcome for today's financial hearing with Clas Ohlson. I also like to welcome everyone participating via the webcast and telephone conference. Moderator today is Niklas Ekman from Carnegie. He will be back later and lead the Q&A session. But I now hand over to the CEO of Clas Ohlson, Mr. Klas Balkow.
Thank you very much, and let me also, of course, welcome you to our session where we are about to present our fourth quarter, our smallest quarter. That, if you look at our development, it's very much in line with the full fiscal year 12-13 that we'll also go through. I think a fiscal that could be summarized as a soft year due to the overall weak market. We are growing with 5% in the fiscal. We are gaining market share. But of course, we are also being affected by the slowdown in the market that has affected our like-for-like, that put pressure on our profitability. We do though feel that we are well positioned for the future with a strengthening multi-channel offering, as well as we are now preparing ourselves for looking into new customer segments, and when time is ready, looking into new markets. But we'll go through the quarter in the agenda, our key ratios. We'll also cover the start for the new fiscal year, the somewhat more positive start. I'll also give an update since this is now covering the full fiscal year of 12-13. We'll cover that. We'll also give you a quick update on our strategic platform and our strategic agenda, as well as some of our key prioritized areas. And of course, we will then have time for a Q&A. Very quickly, Clas Ohlson's today, we have 174 stores in 4 countries, and our turnover is now up at 6.5 billion SEK for the full fiscal year. But if we're now going into the fourth quarter, and looking at the graph behind me, maybe before we go into the key ratios, just to give a quick reflection on our overall market and how that is developing from a consumer perspective. And as you can see, we are continuing to face a cautious consumer, maybe if you exclude Norway, but in all other markets, the consumer confidence is still at historically low levels, and it is a consumer out there that is a bit skeptical on where the market is going and how they're going to view it in terms of their spending, and particularly then for us in terms of their retail spending. This has also affected Clas Ohlson when we're looking at our key ratio and our sales ratio for the quarter. Our total growth for our fourth quarter is up 3% in local currencies. But due to the strong Swedish krona, we are reporting a flat sales in SEK. It has been a challenging market, somewhat also not supported by the late spring, as we are reporting a like-for-like of -4%. By month, February and March was fairly weak. February was affected by the leap year effect in the calendar, as well as March was affected by the Easter effect that we got back in April. But despite and excluding the Easter effect in April, we saw somewhat better performance in the end of the quarter. E-com, worth mentioning, even if, as you can see on the slide here, we are reporting a somewhat lower sales on e-com in the quarter. But this should be put in perspective, as last year we launched our new e-com platform, and on a going basis, we have on a rolling 12, we are up 28% on our new e-com platform. So we are having a positive growth on a going basis, but the comparison figures, particularly in April and May, are very much affected by the launch of the new platform last year. By market, and let me start with Sweden, and also give you a graph regarding the durable goods in the Swedish trade, starting as of January 2012, a little bit earlier than the fiscal year. We had a fairly positive start, supported also in January and February. But then, as you can see, it's been a fairly low growth, almost close to a negative growth in the market. And particularly if you look at going into further in depth into the categories in this. If you look at, as an example, the hardware and the do-it-yourself category, we've had an even worse development with clear negative total growth in the market. For Sweden, this is also reflected in our sales figures, as we are reporting a flat sales in Sweden, again very much driven by the lower traffic out there in the shopping centers during the quarter. Even if we feel that we have a really strong position in the market and we are holding up fairly okay versus many other retailers, but we are affected by the slowdown in the overall traffic. Moving along to Norway. Norway, we are reporting a 3% growth in local currencies, but here you can see the effect of the strong Swedish krona, as we are reporting a negative growth in SEK versus last year. Norway, though, we feel is more of a stable market. We have a fantastic position in Norway, continue to grow, and keeping up our strong position in the quarter, even if also Norway, must say, has been somewhat affected by a late spring that we noted then in May that came back a bit. We'll come back to that in the May figures. Finland, we are growing in Finland, continue to grow in Finland. We have a 10% growth in local currencies, and we continue to strengthening our position in Finland. We've seen last 2-3 years with a positive growth in Finland, but we also noted clearly in the fall a clear slowdown in the market that we also now are seeing reflected in our growth figures that we will obviously keep track on and continue to monitor. But we now have more stores, we have strengthening position, we see that we're strengthening the brand in Finland, even if there's a clear slowdown in the market. Fairly pleasing to be able to report that UK sales is up 7% in local currencies, but as well as you've seen both for the Norwegian and the Finnish business, we are having an effect from the strong Swedish krona, so we are also here reporting a negative growth in the UK. But from a local currency basis, we are growing in the UK. Market is still a challenging market, but we have invested more in our marketing efforts, and we see that provides or gives results in our brand awareness. We are building the brand gradually. That also gives some effect on our sales performance, which is pleasing steps. Leaving sales performance, going into gross margin, and it's not only our sales currencies that has affected that is affected by the strong Swedish krona. Our gross margin is also affected. We are reporting a negative gross margin of 40.5. Again, currency effects has impacted, but I also must say that we've been able to offset a lot of that from a better sales mix and a better performance in our stores, which is pleasing in that perspective. Due to negative like-for-like, this is something that drives up our share of sales costs. So we're up at 2% to 39% in terms of share of sales cost, as well as the increased depreciation that we have basically from our new e-com platform, and some of the investments we have done is also affecting when we're not seeing a positive total growth in the quarter. This leads to, and summarize up, a profit for the quarter of minus 19 million SEK versus a positive of 10 million SEK last year. Again, this is our smallest quarter where we tend to balance around zero, while this year with a soft market, high currency effects, as well as negative like-for-like, we ended up on the red figures. Where we're also reporting an EPS, obviously, that is below last year. But I think moving on from this quarter, this summarize up our full fiscal year, and let me now go into some of the key ratios for the full fiscal. We are growing with 5% in local currency when we conclude the whole year, but I also think it's fair to say that when we look at the whole fiscal year, it's been a soft year. A soft year with Particularly, we had somewhat a softer trading last summer, as well as recall it that the important Christmas trading for us was also in general a weak overall Christmas trading for the total market. I think in Sweden and Norway was the lowest growth we've seen in over 20 years. Still, we are growing and we are gaining market shares, but we have the lower, in particular, it's a traffic impact that we've seen that has been behind the weak market that is affecting our profitability and affecting our like-for-like sales. E-com, the new platform has been launched and we are on a going basis up 28%. When we are rolling this out now in a new platform in Sweden and Norway, as well as we roll it out in Finland and UK. And I think we have a positive development in Finland and in Norway and Sweden, while we still have some work to do, and it takes a little bit more longer time to get the full breakthrough in the UK and in Finland. Gross margin on the total year is down at 41.6. Historically, I think it's still only in a high level for Clas Ohlson, even if now this is lower versus last year. Again, currency effect has impacted, as well as in the large Q3, we had an impact on a negative sales mix in the Christmas period, which was the key influencer for that to take the gross margin down. We also seen during the year an increase in freight costs that we had the peak the freight cost when we bought up our goods for the Christmas period. That also had an effect, even if we're now seeing the freight cost now coming back to the more normal levels. Looking at gross margin on a more longer perspective, we expect to over time to balance the swings in the currencies, and also we are now continuing to work on improving our gross margin over time, particularly behind sourcing and our sales mix, where we also continue to develop our private labels in a positive way. Same as for the quarter, lower sales in like-for-like stores has an impact on share of sales costs. So that is up with 1.8 percentage points to 32.3. And again, same comment there in terms of increased depreciation over the year. That summarized also for the year, the profit that is down versus last year to 431 million SEK versus last year 561. And if you're looking at our EPS, earning per share is down 17% versus last year. But I think it's fair also to put this in a perspective of how the overall market and the overall market climate, in terms of that we are still holding up fairly okay, even if of course this is seen as a very soft market and soft development, a soft year for us. Positively, though, that we continue, even if it's in a weak market, to have strong financials. We continue to provide a strong cash flow. We have improved our inventory turnover both in the stores and in the distribution center. As you see here, turnover rate at our distribution center is up to 6.9. We've had an additional tax payment this year, and we're ending up the year in a net cash position, improved also versus last year. We continue to invest, even if the investment this year has been slightly lower than last year. A lot of that, the investment has been into new stores and to refurbishing our stores, as well as investments behind our IT, different various of IT-related systems. And looking ahead, we will continue to do these investments. We'll continue to invest in more stores, refurbishing our stores, as well as continue to invest in our IT platform. We're also reporting or adding into this financial report that the board has adjusted our dividend policy to better reflect our dividend payment during the past years, as well as how we view it going forward. The dividend ratio should at least be 50% of our earnings per share after tax, with consideration for the financial position. For this year, the board also proposed a dividend of 25 Swedish krona per share, which is then equivalent or the same as last year and representing approximately 84% of the group's net profit. That concludes some of the key ratios from the report. Looking then ahead, and as we are now starting up a new fiscal year, we are also informing the market about our May performance. And in our view, we think we had a fairly healthy start in May with an 8% growth in local currency, still also impacted by the strong Swedish krona, as we are reporting a 5% in SEK. Again, as commented on the e-com, the launch period April-May last year is clearly affecting the e-com performance in the month, even if it looks drastic of 8 million in e-com versus last year's 15. Looking at May 2011, we are still 25% up versus 2011, so the going rate is positive. Leaving the figures and going ahead, as it is end of the fiscal, would like to give you an update on our strategic priorities and particularly also our strategic agenda moving along. And I think maybe first mentioning a few words about our recent progress. When we looked at it over the last 5 years, it's been I think a challenging year for retail in general after the Lehman crash in 2008. But I think we had a fairly high ambitions, as well as we've had a clear agenda of how we're going to develop Clas Ohlson, which is in a time when we've seen low inflation, slow to negative growth in the market, and I also say a large increase of new sales space coming out from ourselves, but also a lot of that coming also out from competition. And we've had a strong, fantastic base on Clas Ohlson, but we have really developed the base and continue to develop our competitive edge. And I think some of the areas, I'm not going to go through them all, but we have developed the range. We have increased significantly our share of our private label. We've strengthened that. We've increased the guarantees, etc. We developed our sales channels. We expanded our store network, new store concept, new formats, developed a new e-com platform with a mobile platform, as well as launching a loyalty program, improved the store productivity, expanded our distribution and modernizing our distribution network to better be able to capable to deliver in an efficient way, improve the purchasing, expanded outside the Nordics, as well as strengthening an international organization. And really, I think one area as well to make sure that we get all the sustainability work integrated into our own operation. And even if the key ratios is not reflected all of this, I think a lot of that based on challenging market. It's although clear that some of the efforts and all the efforts we've done is really strengthening our position. And I think the point I want to make is that I think we are clearly well positioned for the future, even if it's going to be a challenging time, or hopefully the overall market will turn up and improve. I think we are well positioned to take advantage out of that. Looking ahead, though, call it a business plan or call it what we call our roadmap going forward, we will continue to develop Clas Ohlson, and in a snapshot, we will continue to work on the range in a more fast-moving world. I think that we will continue to have speed in the range development. Our multi-channel platform is critical for us, and we'll continue to drive that. Efficiency gains, we are improving the business processes as well as our IT support is key. We'll continue to look at our international agenda, as well as now looking into new segments, and the sustainability will be key areas as well. So more or less the direction is the same, even if we are now seeing clear areas that we can take Clas Ohlson further. Maybe going into some of the areas that we have done and looked at from the international perspective. In the UK, as our latest country that we moved into outside Nordic, we are now in a position where we've seen a more of a positive sales trend, which is pleasing. Still a long way to go in the UK. We now have 12 stores. We continue to maintain our focusing on our 12 stores together with the e-com platform that we have added. We're increasing our marketing investments to support the sales and most importantly to build the brand and to build the brand awareness for the British consumers. And it's pleasing to see now, I think we reported that we had a 14-15% brand awareness share. We're now starting to reach 25% brand awareness in the UK, which we think is pleasing. We'll continue to develop that. Still, a long way to go to come to the Sweden-Norway levels of 98% brand awareness, but we're moving in the right direction. Finland, recall it again. We've had a few years of very positive growth in Finland. At the same time, when we saw that, we also added more stores and strengthening the store network, as well as strengthening the brand and strengthening our overall position. And we also now in the fall added the e-com platform as well to the Finnish market. But looking at it as well, in the fall, as pointed out earlier when we went through the key ratios, Finland is going through as well a slowdown in the economy that we also see is reflecting, and we're now following very closely. But we're seeing that we are really taking steps in strengthening our overall position in the Finnish market. Another area that is of key strategic importance for us is the multi-channel platform that we have started to develop, and we are still in the early phase. We think it's very important for today, but it's going to be critical for tomorrow's consumers. Where the channels, and for a consumer, the channels should meet the Clas Ohlson in a seamless way, no matter what is their preference in terms of sales channels or in terms of communication channel. We have had added from the e-com, we have added the mobile platform. We also now recently launched the loyalty program. And we did that in Sweden in end of March in this quarter. And I think it's fair to say that we've not been the first with the loyalty program in the market. But I think we have incorporated some of the good learnings from others, as well as from ourselves, how we viewed it into our program. And we see a strong potential in this. As over time this will drive traffic and it will make us more efficient in our marketing efforts. We will be able to reward our most loyal consumers, etc. And I think it's pleasing to see that we, after the first weeks now of this program, have had a fairly good start where the consumer seems to like it, where we are a little bit more than 250,000 members into our Club Clas program. That will continue to grow and develop. Multi-channel reduces, when we're looking at the particularly Norway and Sweden, it reduces the need for additional stores in our mature markets. So we are now slowing down a number of new stores. We are targeting, as reported in the last quarter, 12 to 17 new stores for this fiscal that we're into at the moment. Last year we opened up 17 stores. We had then a bracket of 15 to 20. We're now reducing that to 12 to 17. So we are going down in terms of new stores, particularly in our mature market. We also shared, as we have informed earlier on, that we are starting to prepare ourselves for the next market outside the Nordics. And the earlier communication was that we are preparing ourselves for the German-speaking market. Now we are giving a little bit more further information of that. What we're looking at is to target 1 to 2 stores in northern part of Germany, in one of the northern cities in Germany, together with an e-com platform. Time frame is the same. We are looking at earliest 2014, as well as the financial implications also the same, that we are going to do this within the financial frames of 2 to 3% impact on our EBIT in terms of new market effects. Now, I think we're also fairly pleased to look at, or be able to talk about it, at least I am, in terms of, we also started the preparation for expanding our offer to new customer segments. We have currently a lot of business-to-business customers coming into to Clas Ohlson stores, particularly from small to medium-sized offices that is purchasing some of the products they need for their office's supply. And I think it's also, when we looked at it, we've not made it as easy as we could in terms of for them to shop in our stores or shop online. And we're going to change this. And therefore we are now starting to work on improving the offer to B2B, and with a focus and target on small to medium-sized offices. And we call this, it's a sneak preview, we call this the Clas Office offer. And we think it's kind of a perfect match. We are solving many of the practical small problems to the consumers today. We think that with the range that we have and with the offer that we have of great value, we think this is a perfect match for the customers working in the office, where we have more or less all the range that they need. We have no hassle. We have great pricing. It's easy for them and should be easier for them to shop, as well as, which is one area of course, they could shop online, which will be one area. But our great store network is very much located very close to many of the offices out there. So it's very easy as well to go and complement the products you need close to one of our stores. It's a fairly large size market, and we're going to start to work. We are adding a little bit of the range. We're particularly adding bulk products into our range, and we'll start this now already in the fall, even if we look at more of a full-scale launch in first half of 2014. That sums up part of my presentation, and I think in a summary, we continue to grow, but I think it's also fair to say it is in a very challenging market. Our profit is then impacted by this market climate, particularly then with the lower traffic out there in the shopping place. But we also continue to invest for the future, and we have a strong position, and we see that we can continue to grow Clas Ohlson, and particularly with our strong financials, we're now also looking into how do we take next steps, and looking into new customer segments, as well as when time is ready, going into new markets. Niklas, yes. I think that hand it over to you to make the Q&A.
Thank you for trusting me to be the moderator today. I'm Niklas Ekman. I'm from Carnegie. I have a few questions, of course, regarding your expansion and not least Germany, but I think for the record, maybe we should start with more questions on the current trading or recent events. You have left a very challenging 2012-13 behind. What do you think is the main reason for the sharp sales decline? Is it sharp decline in footfall? Is it conversion? Are there any specific segments in your stores where you're seeing a greater decline, say, for instance, in your core DIY assortment or anything else? What is your core take here?
No, I think the key concern we've seen is that the overall traffic has been down. But I think that's also a mix in a way of, if you look at the overall consumption, as I tried to illustrate, it's flat to negative in some categories, but assume it's more or less flat, while we are in a position in the market where we have significantly more sales space out there, so the traffic by unit is obviously impacted behind that. In our case, conversion and average ticket value is going in the right direction, so it is purely the traffic that is a concern at the moment, where we need to have growth in the market.
Mm-hmm. Your sales, they started to decline last spring, and this is something we've seen for many other retailers as well. April, May now have been better. What do you think? What should we read into this? Is this mainly weather or calendar effects or an easy comps, or do you think we can start to be a bit more optimistic now and actually assume a slightly better market going forward?
At least I hope that.
What are you preparing for?
No, I think we as try to view over the last years, we've seen a fairly fragile and nervous market, and at some point of time, I think that will turn up again. Will it be rock high, or will it just go gradually? And I'm more of a gradually growing. Now, will it start now, or will it come within a year? I think it's fairly difficult for me to have a point on, or to make a strong opinion on. But of course, it's pleasing to see that we've seen somewhat more traffic out there. We've seen a somewhat more positive shopping environment, and can just say that we hope that will continue over the summer, and then I think that will give a boost as we move along. We need growth in the market.
Mm-hmm. If we look at Nordic expansion, after Q3, you started to talk about a slight slowdown in expansion, and you mentioned this here as well today. But since Q3, you have signed another 3 contracts in the Nordics, and I'm curious, what kind of target are you looking at in terms of store count now? How much more potential? Are we looking at a sharp further slowdown in the next financial year, or do you think you can continue to expand at a fairly high pace in the Nordics over the next 5 years?
No, I think we're making a fairly clear point that we are slowing down our expansion in particularly Sweden and Norway. The new contract that we are signed recently is within that frame that we have announced of 12 to 17, because there are still opportunities for us out there, but there are significantly less as we move along. So it will be a sharp slowdown in new stores.
Mm-hmm. So far as I know, you've never closed a store. I think you announced recently that you will be moving a store in Växjö, which I think also might be a first. Do you think going forward that you will see a need for store closures? Are all your stores today sufficiently profitable, or are there any that for structural reasons you think you might need to close?
If you look at our mature market, they are all profitable. Depends on, of course, if they just open up, that takes some time. But in general, and actually, it's not going to correct it, but it is not our first store we are moving. We have moved a few others as well, but we have not closed one yet. But I think we'll start to see more of moving stores, reallocating them, seeing better areas, and to follow the market in that perspective. So we are fairly active in that, and taking in a point when we're looking at all the stores, particularly when the contract goes out, to see what we're going to do with the store, if we're going to move it or if we're going to keep it in the same place.
Before I open for questions from the floor, let's take on Germany. It's a market where many Nordic retailers have tried and failed. You've had problems in the UK. So what will you do differently when you take on the German retail market?
I think it is a fantastic opportunity for us. First of all, we have looked at the market fairly thoroughly, and I get a lot of questions from Germans coming up to Sweden. They want us to come to Germany with our concept. But we're also clear, and we understand that what we're doing now, we don't know until we open up. So we are now focusing on 1 to 2 stores in northern part of Germany that will give us the feedback that we want to have. How well is this concept going to be received? And I think I think we are all very excited about getting our stores out there to meet the German customers as they have asked for it, and we'll see how then it's going to be received. So, but we are, compared to the UK, we're going with 1 to 2 stores initially and learn from that and take it then from there.
And can you give a rough perspective on these 1 to 2 stores? Is that over the first 1 to 2 years, or maybe the first 5 years before you start to ramp up?
It depends on the contract that we are getting, and we're targeting one of the larger cities with 1 to 2 stores and getting the feedback from that.
Mm-hmm. Okay, let's take some questions from the floor.
Hey, Håkan Philipsson from Adrigo. I was wondering if you talk about the problem with traffic to shopping malls, and we hear that from others. Could you discuss how bad that impact is? What percentage downturns are you seeing in traffic if you look at shopping mall development in Sweden, Norway, and Denmark? Finland.
It varies by shopping mall, obviously, but in general, we've seen traffic down 5 to 10% in certain periods. So it's a fairly significant slowdown in traffic during the last fiscal year.
And when did this phenomena start? I mean, is it 1 year ago, 2 years ago?
No, I think that we've seen an overall slowdown over the last years with some swings up, but it's been gradually been slowing down. So it's not unique, even if this year it's been fairly soft. If you look at the full fiscal year, last summer was, if you look at the overall trading, was fairly negative in that development. We had a decent fall and then a soft Christmas, and there we go.
Okay, if I may throw in another one. When you went into the UK, if I remember correctly, you gave some kind of a margin impact. You said over the coming, I can't remember whether you said 3 or 5 years, the margin impact would be X. You were prepared to sacrifice group margins for the UK entry. Could you tell us a little bit about how the actual outcome has been relative to what you were looking for?
Well, we said 2 to 3% EBIT impact, and we are within that bracket. So we are spot on that in the impact. So we said 2 to 3, and that's where we are. And
time frame?
Well, of course, if you look at it, we over time, we want that to of course, go down, even if we are also seeing that we are going to use this 2 to 3 to invest in our international expansion. And we're seeing that goes down, but it also, of course, it's looking at when we looked at the market in the UK, we've had expected a somewhat quicker or a better overall market than we've seen. I mean, looking at UK today is still going through a very challenging time, and we respect that and we understand that, and we have a long-term approach to the UK. But over time, we're going to see, and we have not set out, but of course, it's somewhat also dependent on the overall market development.
Thank you.
Hi, this is Stellan Hellström with Nordea. I have a question also on Germany. When you say that you won't enter Germany before 2014, what is the reason for the uncertainty, and why could that be delayed later on?
No, I think there's not so much uncertainty. There's a preparation phase for us. So as we announced fairly recently, we're starting to prepare the range, and we're starting to prepare all the translations, etc. So that's one area. The other area is of course that we want to get the best location and premises in that aspect. And if that takes a little bit longer time, then it takes a little bit longer time. So I think that's very much driven by that.
So are you already at this point looking at new store contracts?
We're looking at store contracts. We're looking at the market in general and following the market to understand and to learn and to view it. And when we think that, for our sake, when we think there's the right timing, we are still not ready yet with our own internal preparations. That's why we've said at earliest 2014. When we're coming into the 2014, that's where we are. We want to make sure that we get the best location.
A final question on this topic also. When we spoke about UK, you said that you are within the range 2 to 3 percentage points EBIT impact. Would you say that an entry into Germany would still keep you within that range, yes, given that UK does not improve profitability from here?
Yes.
Okay. Yes. A follow-up on that, I guess. You say within 2 to 3%. I'm guessing that's roughly 150 million in losses that we are talking about. Has that changed over the last 12, 18 months? Have losses widened? Have they narrowed? And have you also changed your behavior in the UK market? Are you mentioned here today that you are looking more at advertising now. Are you increasing your advertising spend, or are you going the other way and trying to minimize losses in the UK
No,
market?
we have increased our advertising spend, also reflecting that in particularly in the brand awareness, and we will continue to drive that agenda. But obviously what we have changed is that we are not adding more stores in the UK. We have, though, added the e-com platform into the UK, and we are building the platform or the store network from the existing store base and from an e-com, and also starting from there to build the brand and grow from there. So that's basically how we've changed it.
And can I ask on the UK, you're obviously very committed to the UK. Are you voluntarily committed to the UK, or is it the fact that you have very long leases that ties you to the UK market that prevents you from leaving it? Or can you comment a little on that?
No, we knew when we started that this is a huge, fantastic market for us. A huge opportunity, but also what we did not expect was the drastic slowdown in the market. But we still, our viewpoints are still the same, that there is a great potential for Clas Ohlson in the UK. In terms of leases, we have, as we have in the Nordics, we have around 10 we have up to 10 years of leases, but we also have break options in a few of the leases we have. So that's not only holding us back.
Yeah, a question from, maybe wait for the microphone. Sorry. Oh, okay, sorry, we have a question from Niklas Färm first. He got the microphone. After that, you can ask.
Thanks. Niklas Färm with SEB Equities. Good day. Can I just ask some questions on the gross margin? When you said that sales mix have actually been a beneficiary in current trading, is that the same thing to say that there's an increased share of private label sales in the like-for-likes?
Well, sales mix is effective. There are many variances in the sales mix. You have a country mix, you have the category mix, and also, as you're pointing out, certain products, also private label. Private label continue to go in the right direction. But in this quarter specifically, we see in the overall sales mix has improved without, and private label is one element out of that.
Where is private label sales now on a full year basis as a percentage of sales, and where do you want it to be?
It's slightly now above 25%. And we had that as a target, as you may recall, a few years ago, and there was a comment on that. I think there is still room to grow that, and if that's up to 30, we'll see, but I think it depends on how the consumer is appreciating the private labels. The consumers need to decide that.
And in terms of inventories, it's like 3-ish% higher than maybe I expected. But at the same time, inventory levels were very much in line with the historical average for fiscal Q4. Is that intentional? Is that you gearing up for better current trading, or what do you think inventory levels should be?
No, but I think if you look at it, compared to, we've made I think a very strong efforts in terms of balancing our inventories over the years now. If you look at it from the impact we had last year particularly, and we'll continue to have that on a fairly tight level even this year. Now we've added more stores. We have 17 more stores in the network. Again, if you see the turnover rate at a distribution center is significantly up. We have, based on the new stores, we had an increase on total inventory, but it's really on a good level.
Final question. Just any comments like upstream, what's happening in Asian sourcing? Maybe throw in a couple of comments on transportation costs, etc. Cost of goods.
Yeah, transportation cost. The freight is gone down versus what we saw a peak a year ago. We continue to have some inflation in Asia, but also think that the work we are doing, the share of own imports continue to go in the right direction with our own offices. We have now 2 offices in Asia. So that goes, I think, in the right direction, even if there is a continuous inflation pressure from Asia.
Another question here.
Thank you. My name is Raoul Hessegren, representing international private investors. They are concerned about your gross margin being on the low side, and the tendency goes also down, as I see on your diagram. And my question is, when you now start selling business to business, will that also reduce your gross margin in percentage?
That's a good question. I think it's fair to say, if you look at the perspective over the last years, we have increased our gross margin over the last 2-3 years with our own sourcing. We have developed a sourcing program with our offices in Asia. We've taken a significant share out of that and been able to lift up our gross margin. Now, gross margin in the recent quarter has been, when you have these sales currencies with the strong Swedish krona, we having a fairly high impact, as an example, from the Norwegian krona that has an impact on our gross margin. And the currency swings is difficult to manage in the short period. We'll continue to work on that with our sourcing program. The private label, as pointed out here, is also supporting and helping. To your point and to your question, which I think is a good one, we don't foresee that because we are not changing pricing. The customers working in the office today that comes in and shop in Clas Ohlson, they do that because they really like the pricing and they think it's very convenient to shop, and we think they have a great range at great prices. So we're just going to make them a bit easier to shop. So it's not the pricing thing when it comes to Clas office.
Can I follow up on that maybe? How exactly will you make it easier for them? Will you have direct deliveries? Will you offer corporate cards? Or how exactly will you?
The whole payment needs to be improved. We also there are still range of bulk ranges that they, instead of buying small packages, they rather will have bigger packages to buy. As you're pointing out, when you can order, so you can make orders online to have it frequently and to return orders, so to speak, etc. So they are more equipped to an office person than to a consumer consumption.
Mm-hmm. Can I check if we have any questions from the conference call first? No?
Ladies and gentlemen, if you have a question for the speaker, please press 01 on your telephone keypad. That is 01. There are no questions from the telephone. Please go ahead.
Okay, Bile, you have a question?
Yes, it's Bile Dar with Danske Markets. I have a couple of questions on the e-com strategy. Could you just remind us your top 3 competitors within the online space in the Nordics?
Top 3
competitors.
Online. Well, I think it's as difficult maybe to say competitors in on the shop floor, because we don't have any similar actors in the competitive space in that perspective. You have it by certain categories. You have a few players out there on the multimedia categories. You have it on the do-it-yourself categories and also on the home area. But there are no one really equals us in that perspective. If you look at it for going more international, of course, that you have the larger players like the Amazon and so on that is out there, but they are not up in the Nordics yet.
Because the reason for asking is that if you look at the e-com players, they obviously have the benefit of not having any offline sites, not paying rent, etc., and they could spend that marginal buck on marketing. So where do you see your margins heading, given that you have an ambitious online strategy?
Well, I think it's interesting to look at it that way, because of course we are taking, and I think if you look at the trends today when it comes to e-com, and it's really the one who's growing the fastest is the one who has also a multi-channel, where you have the stores that also take the brand marketing, also beneficial from what you're doing on the store level, so on the store space. Then of course that today you have a lot of players out there open up an e-com, but also there needs to be a sustainable operation in that, in terms of so they can make money over time, and I think that we'll see how that goes.
Okay, and then one final question. We've talked about growth throughout this last 50 minutes and the margin impact from UK and Germany, but we haven't talked about the profitability in the core markets, Sweden, Norway and Finland, and they've been sliding over the past couple of years. Do you see any potential of them coming back to levels that we saw a couple of years ago, or are they structurally lower nowadays?
No, I think it's, and I think I tried to point that out, that this has been a soft year with a -4% like-for-like. It has been difficulties for us to keep up our profitability. So in retail, you need to have, to grow over time, you need to have a positive like-for-like, as you have cost for rents and staff and so on that is continue to increase. So we need a positive like-for-like.
Right. Thanks.
Can I ask you a little about your new store format, how that is playing out? First, an update. How many stores now roughly have the new store format, and how many of those are converted from the old? And maybe also if you have seen a tangible impact on your sales once you have converted an old store into a new store.
I think, correct me, John, but I think we're around 60-65% now in the new store format. We are converting, I would say 5 to 10 per year. The new stores are performing better. Now, when we are converting, we're also getting a positive boost, but also, and I think but it's also over time you need to look at this because of course it's fair to say that when we are converting a store, we have a fantastic loyal customer base in many of our stores, and when they come in and we've changed the store layout, they a bit confused because they don't find the products is not on the normal shelf. But that takes a few months, and then they are getting used to it, and then they really like and we're seeing an uplift in our sales. So positive development from the new format in overall, and we are continuing to gradually upgrade.
Mm-hmm. Are you also seeing a shift in more and more consumption shifting towards women? I know in the past you had 70-30 male-female customers, and that moved to 60-40. Has that moved closer to 50-50, and has the new format helped that development?
We are still, I would say we are around 60-40, a little bit depending on market. And we are pleased that female is liking the concept and is liking Clas Ohlson. But I also think one area we don't talk that much about maybe is that we also see that the younger generation really like Clas Ohlson, and we have a lot of young consumers shopping in our stores, which is pleasing for the future.
Mm-hmm. Are there any further questions from the floor? One from Niklas here.
Thanks, Niklas with SEB again. I was just wondering, do you think, generally speaking, it will be more or less expensive to grow in Germany as opposed to in the UK market?
Well,
if you take into account like capex and run rate losses.
Well, of course, the total investment is depending on number of stores.
Well, on a per store basis.
Yeah, but on a per store basis, the rents are fairly high in the UK, and now it depends on where you go in and so on. But in general terms, they're a little better in Germany. So in that perspective, it's a little better.
Could I also ask you? You choose to, or the board of directors has proposed an unchanged dividend of 4.25 or per share for this fiscal year. To what extent is that actually a signal, you think, of future dividend payments? I mean, it's quite above the current sort of goal in terms of payouts.
Well, I think we just adjusted that policy or for that is going to be a minimum or at least 50%, and it also reflects the financial position. So I think it's in line.
Thanks.
Mm-hmm. Finally, I guess just a question on where are you in terms of cost containment? You had a cost containment program a while ago, and that's been annualized, of course, and now markets have continued lower. We don't know what will happen during the rest of this year, but are you actively looking at a larger cost containment program at the moment, or do you feel comfortable with your cost structure at the moment?
Well, we are, as always, you're looking at reducing cost, and I think particularly for Clas Ohlson we continue to do that. But if you look at on a store-by-store basis, we made a fairly large program a few years ago, and right now the stores are fairly efficient, and we don't want to go further in that program because we think it's equally important to secure that we deliver good service, which is an important factor for us as well, that we have knowledgeable staff to meet the customers when they come into the store. So from the store efficiency program, we are more or less where we want to be.
Good. I think maybe we'll stop there and wish you the best of luck and hope that April, May is an indicator of coming months.
Thank you for joining. Thanks a lot. Thanks.
Thank you.